if we reached escape velocity, just that simple, are we to a virtuous circle? A cycle, I should say, for the American economy.
Well, one, what is escape velocity? I mean, I would argue that the 2% growth that we've had for many years leading up to this
is the new escape velocity.
Obviously, it was fast enough to bring the unemployment rate down dramatically over several years. Going forward, having the tailwind of tax policy, if done right, and if we do sustain higher investment levels out of this, some good, better supply-side dynamics, then you can stretch the cycle for longer. We've been arguing since 2014 this would be one of the longest expansions on record. I think the latent cyclical pickup in CapEx that's led to higher productivity can do that. Right. Lack of overheating in the housing market, and the fact that you've got a late cycle consumer that now is getting higher take-home pay starting sometime in January if you're a business that can adjust withholding that quickly, but certainly by mid-February. And also, I'd like to see more announcements from companies that they're raising permanent base pay. But
rather than bonuses that we're seeing.
We'll take these one-time, one-off bonuses, but I'd like to see it translate into
one of the hallmarks here is a disbelief of moving under a 4% unemployment rate. One of the most important interviews we did this week was John Herman at MUFG, who's got a single-point estimate of 3.11% unemployment rate, and it's out a ways as well. Is the Central Bank of the United States ready for a 3.7, 3.4, or dare I say 3.1% unemployment rate? I don't think they're that's not within their framework, is it?
Well, it's certainly not within their forecast. And it's not within most economists' forecasts because getting that far down into the threes is just scary. But the reality is that regardless of how healthy the labor market is, we still got an incredible amount of downward structural pressure on labor force participation coming from aging population that's moving even further into older age groups associated with lower rates of labor force participation. So that means, what does that mean? It means that full employment is simply much lower than where we think it is. I think that the policymakers on the FOMC believe that NAIRU, the natural rate of unemployment, is much lower than where they peg it to be. That would be evident in the fact that we're at a 4.1% unemployment rate, and we've seen little pickup in wage growth, or disappointing pickup. But what they are prepared for, and what they do believe will happen is that it's coming, right? Just the unemployment rate has just not gotten low enough yet, but that wage growth is coming.